It's Tuesday, the 21st of September 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Iron ore prices fall below $100 a tonne, hitting not just the big miners, but also the national economy. That's our main story this morning. Also, another infrastructure asset gets a mega bid from an offshore buyer. The COVID news gets a bit better, and we have a look at who's winning the streaming wars. Plus, stay listening for a chat to demographer Simon Kustenmacher about Australia's population grinding to a halt. But the big story today is iron ore. Prices fell even further over the past 24 hours, down to a low of $90 a tonne. It peaked a few months ago around $230. What's happening?
Very good question, Michael. Futures trading in Singapore pushed prices lower, but it's actually well past being rational at this point. We know Chinese steel mills will cap output, but apart from that, there's not actually much more to it. There's plenty of selling momentum and panic has set in. Now, the Chinese spot market is actually closed at the moment, today and yesterday. That's not helping things either. One of the issues at the edges, which is increasingly relevant, is Evergrande. That's the biggest property player in China. If it goes into liquidation this week, which is possible on Thursday, then the property market in China could tumble and 35 to 40% of steel goes to property in China. What it all means is for our majors, they're in all sorts of trouble. BHP, Fortescue and Rio were all down between 3 and 4% yesterday, leading the market lower. Some of the juniors like Champion Iron, it was off almost 13%. Mineral Resources, another junior, was off more than 5%.
Big moves. Is that why the market was off so much yesterday?
Pretty much. There was contagion throughout the whole market. Only one of the top 40 stocks actually was in positive territory yesterday, and that was Coles. Overall, the S&P ASX 200 ended the day down 2%. That's about $50 billion wiped off the bourse. It also put pressure on the Aussie dollar, and that's now trading just above 72 US cents. Interestingly, iron ore helps Australia's fiscal position. Every $10 drop cuts about $6.5 billion from the budget bottom line. So it's starting to hit the budget now, and it's really moved beyond stocks onto the national economy.
Big story. So what have the markets done over the last 24 hours?
Well, it's been pretty brutal. The sell-off has been global. I've mentioned the iron ore miners here in Australia. Locally, the battery metals groups, Lynas Rare Earths, that fell 11%. Nickel Mines was off more than 9%. Lithium producers, Pilbara Minerals and Orocobre, both fell more than 8%. Another couple which I like to focus on at the moment, AMP is now at 95 cents a share, the lowest ever. AGL is at 20-year lows. All the banks were down yesterday, around 2%. It was a very rough day in the office. Same deal on Wall Street, though. It sold off heavily overnight, and at one point the S&P 500 was down as much as 2.7%. Now, that's the biggest one-day slide since October last year. Now, Wall Street is still up 15% this year, but wow, what a sell-off overnight. Basically, investors are worried that central banks will start tapering bond purchases, which is the first step towards tightening monetary policy. That's the big one. They're also really worried about China slowing, and particularly about the country's largest property group, Evergrande. We've mentioned this group. There are fears it will default. It owes about $300 billion, and D-Day is Thursday. European markets were also sold off overnight. The Stoxx Europe 600, which is a broad measure of markets across that region, fell 1.7%. That was a 2-month low. And shares in Chinese and Hong Kong property groups fell to their lowest level in 5 years. That, of course, is all about Evergrande. And Michael, you'll be pleased to know cryptocurrencies were lower too. Bitcoin was down 7%.
All right, thank you. We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. Energy Group, AusNet Services share price jumped as much as 22% yesterday after receiving a $9.6 billion takeover offer from Brookfield Asset Management, the Canadian giant.
Yet another bid for a big infrastructure asset in Australia. I'm almost getting sick of talking about them. Sydney Airport's got one, Spark Infrastructure. In a moment, I'll tell you about WestConnex. And AusNet Services has just got one from, as you mentioned, Brookfield Asset Management, the Canadian group. Now, investors love these big infrastructure assets. Stable, predictable income. That's what they want. This is the third time Brookfield has had a crack at AusNet. And this time, the board of AusNet are happy to open up the books. They offered a 26% premium to Friday's closing price, and now they go to due diligence. The twist in this one is that two of the big shareholders are Singapore Power and State Grid Corporation of China. Convincing those two groups to sell is the big unknown. Still a lot to play out in this one.
Yeah, let's have a quick look at COVID news. Things are looking much better now in New South Wales with 935 new cases recorded yesterday. That's the first drop below the 1,000 mark in more than 3 weeks. There were still 4 deaths though.
Yeah, look, fingers crossed the news keeps getting better. Gladys Berejiklian, the Premier, certainly welcomed the news, but she warned, and she's been saying this for a couple of weeks, the state needs to brace for October, which will be the month with the largest number of hospitalisations and deaths. Yesterday, Victoria recorded 567 cases. That was the highest this year, and 1 death. There were 7 cases in the ACT, 1 in Queensland, but fortunately that person was in hotel quarantine. In other COVID news around the place, Moderna vaccines landed in the country over the weekend. Great news. And the problems with the supply of Pfizer, there was all sorts of rumours over the past 48 hours, pushed along a little bit by the premiers, particularly Daniel Andrews. Well, those problems seem to have been sorted. The other COVID story today involved sometimes violent protests outside the CFMEU offices in Melbourne yesterday. Now, it was all over mandatory vaccinations, and it stems from Daniel Andrews, the Victorian Premier, last week saying construction workers needed to be vaccinated to be on site. Construction workers are upset about that. They've complained to the union leadership, including John Setka, a controversial character. They believe that he and the union haven't done enough to prevent mandated vaccinations. The scenes were pretty ugly, and last night the Andrews government came out and shut down the construction industry for 2 weeks.
Now, building materials companies have done well recently with booming housing sectors around the globe. James Hardie and Fletcher have both done well, at least in share price terms. And yesterday, there was a big announcement from BlueScope.
Yeah, BlueScope is Australia's biggest steel maker. It's having a look at developing a facility on the east coast of the US to manufacture painted and coated steel products. Now, it wants to diversify its business in the US. At the moment, it does, think colour-bond fences. That's pretty much what they do. They actually want to move beyond that. It's already spending $1 billion expanding its North Star steel mill in Ohio, and it's pretty clear, really, to see where BlueScope's future lies, and that's outside our shores.
Now, yesterday you mentioned reports that Transurban would buy the 49% of WestConnex that it didn't own. Those reports were true, and it's ponied up $9.3 billion.
Transurban's quite an incredible company. It has had a rough COVID period. People haven't been driving, fair enough, but it's 6 times bigger now than it was a decade ago. The CEO is a guy called Scott Charlton. He came into the job in 2012, and he's just done a terrific job. So Transurban now is the dominant toll road player in the market, and as you said, it wants to buy the 49% of WestConnex it doesn't own. It's gone to due diligence. It'll be raising $4.2 billion to fund the bid. Now, its share price was on hold yesterday. Probably good luck to it, given what happened in the market. But it looks like Transurban will get that 49% and continue its domination.
Now, running through some of the other stories around today, Barnaby Joyce isn't known for remaining quiet on controversial issues, and yesterday it was certainly no exception. Scott Morrison was on a plane on his way to Washington, which makes Barnaby Joyce the acting Prime Minister, and he stood by Christian Porter, the former Industry Minister and Attorney General, who stepped down from the front bench on Sunday over who paid his legal bills in his defamation case against the ABC. Now, Mr. Joyce said Christian Porter was an incredibly capable minister, but had a bad day at the wicket.
More like a first ball duck, that was. Another federal government story is the decision to extend by 5 months the International Aviation Support Program. That'll push it through to the end of March next year. That's about an extra $120 million for the sector. You could imagine Qantas was very quick to welcome that one.
Yeah, good news for them. Now, my favourite story of the day, the latest streaming figures that show Netflix at number 1 with 6 million subscribers. Stan has fallen from number 2 to number 4 with 2.4 million. Amazon's at 2.9 million and Disney Plus is at 2.6 million. I'm personally a subscriber to all of them.
As am I.
Excellent. We are inflating the figures for them. KO has 1.1 million subscribers according to the Telsite's 2021 Australian Entertainment Subscription Study results.
I know this is just a lead-in because this next story is for you, Michael. Mm-hmm. The streaming platforms were the big winners at yesterday's Emmys with Netflix and Apple TV. They took home the major awards. Now, across the TV shows, the big winners included The Crown. Have you watched it?
I have not seen the latest season, but it is a ripper up until there.
Don't make an excuse. Ted Lasso, seen it?
No excuse.
Hacks?
Seen it, love it. Fantastic show.
Mayor of Easttown?
No, not yet.
I'm in lockdown. Seen them all. Love them all. There's another couple of tiddlers worth a mention, Michael. Telstra's launching a 2-hour delivery service from some of its retail outlets for new sales of Apple and Samsung devices, which were launched over the past week. Bit of a gimmick, but not bad if you can pick it up in 2 hours.
Mm.
And Mercedes has signed up all of its local dealers to a fixed price model. So when you go to their car yard, you won't be haggling about a price if you're buying Mercedes. All 53 dealers will be selling similar cars at the same price.
Hang on. No haggling at the car yard for a new car.
I feel like I'm in a Monty Python video at the moment.
This is an outrage. You cannot take away haggling for a new car.
I know.
A car yard is not a supermarket.
We don't trust them. And if we actually can't take the haggling away, they're going to go up that the Edelman Trust Barometer above journalists, which none of us want.
Yeah, we'll see. Now, what's the key overseas news this morning?
US President Joe Biden, he's due to speak at the United Nations General Assembly later today. He's expected to make the case for the United States and China cooperating on global threats. The big one there is climate change, of course. He's also likely to insist that the countries aren't headed for a new Cold War. Let's hope so. An interesting one out of Associated Press. It's estimated that COVID has now killed as many Americans as did the 1918-19 Spanish flu pandemic. That's about 675,000. Also, I mentioned this week that the US, Japan and UK central banks were holding monetary policy meetings. I neglected to say that Switzerland, Sweden and Norway were also doing some.
Ugh.
There was an election in Canada overnight. Justin Trudeau was fighting for his political life there. And of course, there's a big election in Germany on the weekend. All these things don't help global markets and add to the uncertainty. And finally, just a quick one from the Financial Times. The world's largest tech companies have bought up smaller rivals, smaller companies at a record pace. So far this year, they've spent $264 billion buying smaller players. Now, there's lots of debate in the US and other places that Apple, Facebook, Amazon, Google and Microsoft stifle competition, in part by buying competitors. This adds to that evidence.
Oh, look, if any of the tech giants are looking to acquire a small business podcast, I think we're happy to take a meeting, aren't we?
Yeah, we'll take a meeting. Yeah, we'll see.
Now, up next is the Daily Interview. Simon Kustenmacher, co-founder of the Demographics Group, one of our favourite guests.
Well, I've got to say, one thing about Simon, he's so interesting, and like Ziggy Stotowski, Shamara Wickramanayaka, he makes up the trio of great names on Fear and Greed. Simon Kustenmacher.
That's up next in the Fear and Greed playlist on your podcast platform, or you can find it, of course, at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael. Have a good day.
You too. It's Tuesday, the 21st of September, 2021. Make sure you followed Fear and Greed on LinkedIn, Twitter and Facebook, and you can always find more info at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Enjoy your day.